All right, so let's talk about entries. So we're going to go ahead and use the same example that we used for the getting in sync with your market. And we were looking at the NASDAQ at that point, and so the day was unfolding. And so the way that the day ended up working out ended up being quite a good example as far as kind of layering that into how we could enter into that specific scenario based on the breakdown of that morning process and getting in sync with things and getting in essentially in vibe with the market. And so there were some key points that I thought that were really good and pretty important that we could go over. So anyway, so just to recap real fast and get us back, like I said, kind of in sync with what we were talking about was, remember, we were in a downtrend. The market had started to break outside of the immediate momentum that was happening here to the downside. We were heading up towards this resistance level. And so yeah, so we can see some momentum has definitely shifted to the upside. The daily momentum is to the upside, even though the longer term trend is down. So this is kind of a mean reversion scenario, right? And so now let's switch over to the 30-minute and see exactly what's happening, right? So we have essentially previous day high is the closest resistance here, along with this high here, or this resistance level here, which is this previous high here. So good target there. And so what we're looking at is we are looking at even though the market is moving higher, this longest and less steeply angled trend line has been broken, right? So usually when we break a trend line, we will have either a movement to the downside, or we can have consolidation, or we break, move lower, and then we can break out and take out the highs and head higher, right? So then it's kind of like a three scenarios of, okay, well, what happens next at this point? Because at this point we say, okay, momentum has seemingly paused, so now we need to follow price action and figure out what the market wants to do. So remember, we always want to let the market lead, and so at this point there really is nothing to do. So there's no entry. The closest thing to an entry that would make sense at this point, in my opinion, would be this being again, kind of a mixed scenario of we're in a downtrend, but we're in a short-term counter-trend uptrend as the mean reversion is happening and price is moving against the trend, would be to essentially trade with the breakout. So in a scenario like this would be something that, depending on the entry that you could get and what you were targeting, you could start with something smaller, or you could go in full size and just be very vigilant and quick to reduce the size of the trade if things quickly deteriorated and stopped working in your favor. But and one of the cool things too about consolidations is, like, let's say the market broke out to the upside from here after a pretty solid and tight consolidation like this. If the market broke out to the upside to this, I would expect there to be follow through. Now you can kind of look at volume and see how that compares to traditional volume, because there's going to be, everybody else is essentially looking at the same thing, trying to make decisions as far as what they're going to do, right? Anybody that's trading this on a short-term basis and not a long-term basis is going to be making decisions. You know, a 30-minute chart is a pretty solid time frame. So if the market broke up to the upside, and so we traded that breakout to the upside and we bought and we went long, and so now we're targeting these levels here, and depending on our average daily range for the day and where we're at will depend on where we think that we might be able to get to. But let's say it broke out to the upside and failed here, and then broke down and then reversed and broke these lows. That can be a very, very strong and powerful pattern price action pattern showing that price did not have the strength to break out to the upside, but it did have the strength to move all the way through this previous consolidation and take out all of these stops that were previously setting up to go for all the traders that were setting up to go long here. And so what that will create oftentimes is a very powerful move to the downside. So if you're paying attention and potentially anticipating that, and you're not entrenched in your belief that it has to go higher, then you can make that move. You can see it, you can adjust, and you can get short and end up covering your losses from the first part of the trade and making a stellar profit on the last part. But anyhow, let's go ahead and go through this day and see how this worked out. So and look at our entries. So again, we're in balance from the previous day, even though price has essentially begun to stall out. So now if the uptrend was going to move higher, which seems to be the easiest and the clearest path forward, which essentially we would find support here at maybe the lower value area low, and then we would jet higher from here, and we would break out through the value area high and make new highs. We got to be ready for what could potentially happen if things break lower, and we can see that there's a pretty good drop here that could happen down to the previous day's value area high, or not the previous day, but the day before that, right? As we start looking farther to the left to find our support areas that we can target. So let's jump down to the 5-minute and see how things worked out. Okay, so we can see that there was a big breakdown at the 8:30 time frame, or not the 8:30 time frame, but the broke down at 8:30. This is on the 5-minute time frame. And so what you can see here is I've overlaid the previous day's value area high, low, and POC onto the chart just so that I can track that. The price action in regards to those levels, that helps me. You may not need that. You may be able to jump back and forth and just see where it's at. So what I'm looking at here is that price is broken down very heavily to the downside. This big chart, or this big candlestick here, really didn't give us much for entry, and we really didn't get a pullback immediately to this level to essentially establish a short position from. So this would be a scenario where I would just sit on my hands and you have to wait. Okay, now if we believe that momentum is truly initiated to the downside and we want to go with the flow of this breakout, then because price broke down, then we're going to want to be patient. If we think that price is going to continue to the downside based on us following the price action of the morning and the volume, we're going to want to wait till we get a move back up into this value area low and maybe even the point of control before we attempt to short it again to give us the most optimum risk reward, right? So here, price breaks down below these lows, ideally our stop is going to be up here, because price can come back, can break down, come back up into this congestion area, and then be rejected again lower as price, as that was just determined by the market. That's what it wanted to do, right? Just because price breaks down and comes back up into this does not invalidate the short trade, right? That's just a part of the price action. It can come, as remember, it's a value seeking process. So it's going to come, value is created here on a short-term basis, can break down, can come back up, can test that value again and become rejected lower, which could fuel again our further belief in the trade that we are seeing exactly what we think is healthy price action, and we want it to, and now we can continue to gear that trade to the downside. Because remember that things that happen in a stair step are going to be the things that create the sustainable trends versus these vertical moves that cannot last or will not last, right? And are pretty much impossible to be able to gauge as far as how long and how far they can run. So that being said, so let's take a look back on the 5-minute chart. So at this point, we are now anticipating movement to continue to the downside, and we are ready to align our trade with that, right? So price actually, as you can see, it comes down here, consolidates at the current developing VWAP, and price actually comes all the way back up and tests that point of control, right? So we say, and this is also the previous day VWAP close, and so this would be a beautiful place to establish a short position, right? Because price has already run significantly to the upside. Now we see that pretty significant volume came in, and so it could potentially power through here. Now again, think about our risk to reward, right? If we're initiating a short in this area, right, because you're never going to nail these, essentially, you can have a sell bar or a sell stop here to trigger an entry into the market or a sell limit order. But if it comes to right here and you had your entry here, then you've missed the entry at that point, right? So it's not guaranteed. This is not a good example for that specific reason, but I thought that it was powerful in exactly the price action that surrounded it. So let's say we decided to get short somewhere in here, okay? Maybe we had our entry at the prior to the value area low. That would be a pretty safe entry as far as I'm concerned, right? And you could even consider this the positive, the +1 standard deviation band of the VWAP is usually a good entry as well in the opposite side of where the momentum is, or the trend for the day, because price often doesn't move past that, or not significantly past that, if it's going to continue moving in a certain direction. But as we can see here, we have these new resistance levels, and so those are also a good areas to target. So somewhere in here would have been a great entry, as far as, again, having minimal risk or more minimal risk as far as where it can break out up here. And then, because if we look at it, right, if we were to sell any of these, the farther down we go, right, the more potential risk there is for our stop that needs to be up here. And so now we're essentially betting and anticipating that the market's going to do exactly what we want, force itself to the downside, and we have no room for error if the market decides to come back up and test this potential support area or resistance area that we know is totally a possibility and would be absolutely okay, right? So saying that, we could potentially miss that run to the downside if it does not pull back, and that's something that we just have to come to terms with and stuff to say that's okay, because if reward and risk is not skewed in our favor, then we can either A, trade smaller and just try to capture a little bit of that momentum, expecting it to reverse at some point, or we just have to sit on the sidelines and just say, this isn't part of my setup, this isn't part of my trading that I typically do. And oftentimes when you track those type of trades that are not part of your system, will end up in a loss, and they're not really worth it anyways, even though the price actually makes you want to chase it. All right, so that's being said, let's quickly run through the rest of this. All right, so we get our entry here, and price quickly moves down back in our favor, right? And so as we're talking about taking profits, we're going to, as price begins to hit new support levels, as price moves to the downside, these are things that we can look at as far as where we want to take an initial part of the trade-off to help improve our average and also bank some of that profit, reducing our risk further. And so it comes down, it hits this support level here, essentially breaks this this trend line here, and so as price continues to move, now we're seeing price come back against us without being able to test the lows, which is a warning sign. But again, as long as price is continued to be below this level, there's nothing saying that it can't continue to come back again and continue to move lower. So we're not doing anything with our stop, we're not changing anything. and price ultimately breaks out to the upside. So at this point, you've got a couple of options, right? You could have had your stop or part of your stop again above this level here, because at this point, price, even if you had, when you set up this trade and your stop was essentially could be above the value area high, expecting the range expansion to the downside, once we've tested this area and it's moved lower against us, and this is the new resistance level, right? And you can kind of see this trend line here, right? Where it's like it almost tracked that and hit that trend line. Now it's breaking out and momentum is significantly breaking out to the upside, right? We're not having further, I would like to have seen after this, I would have liked to have seen price come down here and then, you know, at a minimum, retest the high, but not break through in a significant way. So at that point, it's just up to your experience, your risk reward, where you feel comfortable placing the stop, because again, how crappy would it be to have your stop here, it comes up, taps you out, and then reverses to the downside, right? So that is a potential risk when we try to maintain a tight stop, as compared to taking a profit down here at this support level, improving our average to where we can have our stop out here and we're risking essentially minimal money and we're letting the market take us out. So it becomes a personal preference at that point. But so what we are seeing is price essentially completely reversing. So we had a nice big consolidation to the downside where we would expect price action to follow through in a meaningful way, and it does not, and price now breaks through the value area high. So we can swap back over to the 30-minute chart and we can see how this works out, and it breaks that previous day's high. And at this point, just like I was talking about earlier about the fake out here of it coming up, testing the high and breaking down through this, it's essentially done that in the opposite fashion, right? We would have expected it to price to continue to the downside. It did not. So now that it's broke through the upside, we are now expecting a strong move to the upside. And that is also within the daily, the current daily momentum that's happening, right? So now we're watching the price action unfold. Okay, it breaks through that value area high and we continue to trend higher. And so at this point, we're looking for areas to get long in as well, right? We want to, now our directional bias has shifted to the upside. We're expecting the trend to continue to the upside based on that price action, based on what we saw. And so now we're looking for a low risk entry opportunity. So because of our conviction in the trade, we would have, at this point, you could have a little potential or potentially a higher room for risk, you could say, as far as where you wanted to enter. You can see the steep trend line here. You can see that there was another one you could have potentially drawn here that was broken and then essentially broke out to the upside. But again, not a super ideal entry scenario, right? And so whether you were just going to enter small and try to track this momentum for a bit and try to take a little bit of profit based on what you've seen, or at least, you know, establish, let's say, this little trend line here, this little counter trend line here, and the breakout, or just entering around this value area high level, or even the +1 standard deviation band, just trying to get into the market. Again, maybe not a full position, but a partial position, trying to establish something so that we can take advantage of part of the move that's happening. Ideally, we want to wait for a deeper pullback. Like now that we've come up here, a nice pullback down to the value area high, or even down into this part of the support. This would be ideal, right? A pullback back to the POC, back to the value area low, to establish the trade for another move to the upside would be the most ideal and lowest risk, highest reward scenario. So we continue to watch this. Okay, price comes down, tests the +1 standard deviation band for the VWAP, and price ultimately fails there, continues to move down. And we've talked about this, right? A very strong move to the upside, very steep move to the upside right here is going to have a sharp, its tendency is going to be a sharp reaction to the downside. And if it doesn't have that, that is the sign of a very sustained and strong trend with strong buying pressure. And that's where you just want to get established, and you want to ride that sucker out, right? But that's what we see here. Even if we got in here around this area, price ultimately fails at this level, continues to move lower, and moves down to VWAP and the point of control, and breaks through that value area low, right? And so we talked about, if price is going to continue moving upside, that oftentimes it will not break down through the opposite first standard deviation band. And so that's what we see here as price gains support. And so this counter trend, the sharp counter trend line move here that we know is not sustainable, is now it's broken up through here. So if you were looking for an entry trigger based on a trend line, as far as us waiting for momentum to shift in the other direction, now that the price is now that the selling has subsided, then this could be where we could potentially see the low of the move, right? Price moved lower, took another stab at the downside, it failed here, so that's a positive, that's a bullish sign there, and we've broken momentum back to the upside. So we go, okay, we had talked about establishing a new position here. If we were going to ditch the trade at all and this was going to become a consolidation type trade, then price should continue lower back down towards the lows. And so that's not what we're seeing. So we're still essentially bullish at this point, even though it's moved down lower than probably what we would like. And so now we're going to watch what happens. And so essentially it moves higher from there for the rest of the day. And so that was your primary solid low risk entry for the day. It was right in this area here. So as you can see, it was just about being patient, right? If this was a day trade for you, you would have had to wait until almost 1 o'clock before you really got your ideal entry. And so for a lot of people, they just can't do that. And that's why a lot of people are not successful in trading markets like these, when it's really just sitting on your hands, waiting for the ideal scenario to come up and not getting chopped up within the nuances of the price action in the market. But setting a plan, looking at it objectively and not getting caught up in the heat of the moment, and being consistent and following through with that. So anyways, I thought that was a good entry primer based on the scenario that we looked at before with getting in sync, and now we're moving through the actual entry process and how you might want to think about going through that. So hope you got value out of that, and I'll see you in the next section.